Hi, Ben Kingsley here, Managing Director of Empower Wealth. Now, we know through Jamie's message that you've just received that we are being impacted in regards to how we serve you, our valued customer. Now, part of that is that we are definitely moving to remote and basically distance servicing. Now, good news from our point of view is we've been doing that for a long time. We've got customers all over Australia and all around the world. So we know how to serve people remotely using our technology. So it will definitely be business as usual from that point of view. Now, what I wanted to talk to you about today was more around what's going to happen in the property market. And I want to talk to you about the little superpower that is the long-term opportunity inside the property market. But my first message is really around the economic story here and what's actually happening. So, number one, we need to understand that this is a supply side driven correction. All right. Now, what that basically means is that human beings, the mobility of humans is being shut down. Now, when you shut that down, we can't turn up to work and we can't make goods. And then there's obviously impacts in terms of the supply chain upstream and downstream. Now, that's what happened in China. And that's basically what's going to happen through the disruption that we see here in Australia and we're obviously seeing in Europe and America as the time goes by. So we take a deep breath and we understand that this is a temporary thing. It's not necessarily something that's going to go on forever. We start to understand what's happening. And that's why most economists also believe that this will be more likely a V-shaped recovery than it will a long protracted recovery, which is what you normally get when it's demand-led. Because what happens in the demand-led correction and slowdown is there's just no impetus and confidence in the economy and everything just trickles to a halt. So you need a stimulus program to get into that. Now, in this particular case, because it is really a shock in terms of the supply shock, we can't all turn up to work safely and happily go about our duties. We're going to get this impact in terms of mobility and movement, and that's that big shock that we're getting. But on the fact that we've also got stimulus happening around the world, monetary policy changing, everything gearing up, once we do have mobility, in other words, once we have confidence that our health is going to be okay, then we are most likely going to see a very strong level of activity and mobility, and the economy will increase significantly on the back of all the stimulus and everything that's going on. So what does that mean for the property market? Well, if we take a really long-term look, if I was looking at the next decade, our superpower is really in Australia, our population story. So we've got natural birth population coming through. We've got really high immigration coming through. And that is really our economic superpower to drive the economy forward. But also, it's the big story around property demand and supply and construction and all the things that keep our economy moving strongly. So the next 10 years is looking fabulous because once you get past this point of inertia and concern and uncertainty, Australia looks like a great place to live. It's safe, secure, good governance, relatively low debt levels. So it's a good place to basically come and have a prosperous future. And so we'll expect that to continue over the course of the next decade. But what happens in these types of uncertain times is people start to change behaviours, act a little bit irrationally, i.e. enter toilet paper. But when we get to those types of circumstances, we know that there's going to be a demand drop-off. Now, what was interesting about the Australian market, if we look back over 2017, where we saw the price correction starting to come through 2018, and we saw markets correcting in some cases 14, 15%, other markets 20, 25%, a lot of that has basically come back through. And that's another good example of a supply side execution, which in that particular case, it was APRA. So APRA came and effectively slowed the supply of finance. So that corrected the market, everyone slowed down, got back into rational thoughts, and basically now the market's opening up, the finance markets were opening up, interest rates were coming down, and the property market was moving. In fact, if I look at the data from CoreLogic at the end of February of this year, 10.7% growth in Sydney, 10.7% growth in Melbourne. Add to that the income yield from the rental properties, 14.4% and 14.3%. Now, we know this type of thing doesn't happen on the stock market. We've got a lot more volatility there. So the question is going to be what happens in the short term. Will we see a flight towards property? And will we see a lot of that pent-up demand that was driving that move forward? Well, the indicator really for that, one of the big indicators is auction clearance rates. So if we start to see auction clearance rates coming down, that means probably of our 5 or 6 or 10 buyers, we're losing a couple of those buyers. So what should you do around your property strategy? Should you be committed? Should you stay the course? Well, here's my tip. If you are in a good financial position and you've got job stability and security, even though this health crisis will come through, then you should be committed and stay the course. That's really important because guess what? You're going to have less buyers. Less buyers in the market means better buying opportunities for you. So if that is your situation, stay committed. If you're also someone who has planned to do something next year and you've, again, got good job security, you've got a good income and you're financially stable, then you might want to move your activity forward. We've already had clients coming and speaking to us who are in that position who are already saying to us, let's go, let's make this happen. So that's an important message. On the contrary, and this is also an important message for those people who aren't sure about job security, and that is you now need to start focusing in on your financial position and where that sits and what sort of buffers you've got and all of that. So I've got a message for you, and that is to get onto our My Wealth portal. So there's a link here on this video, below this video, where you can get access to the My Wealth portal. Now, when you get access to the My Wealth portal, I also want you to click on the other link directly below it, which is a copy of the instruction manual. So that will help you set up your money smarts and get an understanding of cash flow in and cash flow out over the short and medium term. So that's completely free. So if you haven't already got a copy as our valued customer, it's time to grab that now. So let's just recap. We want to make sure that if you're in a good financial position and you're in a sector where your job is secure, and I'm talking about all you great teachers and people in the governments and people in medical services and in technology, now might be a great time to act. For those of you who are in maybe tourism, travel, recreational, discretionary spending, some retail spend, maybe a time for pause, but no excuse for you not to be able to get onto the My Wealth portal and get your money organised. You may have a bit of free time over the course of the next couple of weeks where you're able to do that. And I think it's good for your mindset and sound of mind position as well. So coming back to what uncertainty means for those who are in a good financial position. So I mentioned if you're already committed on the path, you should continue to execute. If you are looking to move quicker, and this is my message, uncertainty in an investment sense actually equals opportunity. So the best investors in the world will tell you they do their best buying when everyone else is uncertain. So if your financial situation is one in which you have job security, you have a good buffer, and you've got good income coming through, now might be a great time to also get on the portal, put your numbers in there, and also request an appointment with one of our property investment advisors, our mortgage brokers, or our buyer's agents as part of that story. So don't wait, because guess what? If you do wait, there are people who are actually putting this off. So you don't want to be one of those people that everyone goes, now it is safe, and there'll be a flood of demand coming back into the marketplace, which we all know, if there's strong demand and low supply, property prices are going to go higher. So short term, yes, this health issue is temporary. It will pass, and I'll leave you with this final message. You're investing not for the next 1 year, not for the next 2 years, but your investment, whether it be owner-occupier or investment for the long term. If you're investing, you are investing for the long term. You are not speculating. So when we think about what might happen to property prices over the next 1 or 2 years, just remember, less competition, better buying. And if you think about the long-term returns, they are powerful and they are life-changing in terms of your financial transformation journey. But I want to leave you with one statistic, which is really powerful in terms of what has actually happened in one particular market. So we've got Valuer General data back from 1974 through to the end of 2019. So this is all the data collected from the Land Transfer Office, collated and corrected. Now, across metropolitan Melbourne, we've seen since 1974, the median house price was $25,500. We have then seen in 2019, the median house price is $704,900. Now that, in percentage terms, is a 2,664% increase over that 45-year period. Now that is a 7.7% capital growth compounding return year on year. Add to that the rental income that you would be getting on that property, and that's financial transformation. So that is my message for you. Think long term, don't get caught up in the inertia and in the uncertainty, and stay the course. And we are definitely here to help you as our valued customer. Remember, on Thursday, we'll be talking in more detail about the opportunity in the current property market on the Property Couch podcast, of which you will also get a link to in our Friday morning newsletter. So there will be more updates as required, but just remember, this is an interesting opportunity for those of you who have the capacity to move forward and to fast track that movement. Or secondly, if we're not quite sure, it's also a time to get onto the My Wealth portal and tidy up our finances. Thanks for watching.